I'm going to pass the baton to you now, Carl. Looking forward to speaking with you and meeting you. Your buddy's here to give you moral support.
And make fun of him too.
And have a good time. We're going to have some fun here, Carl.
We can hear you. Hello, Carl.
Oh, Yasu, Stelios, how are you, my friends?
Hello, mate. Very good. Very good to hear you, man. Very good.
Dale, nice to speak with you.
Nice to meet you, Carl. Any friend of Stelios has a high recommendation in my view, and I want to thank you for your time today, for coming in to speak to us. Yeah, and
so I was just interested listening to you guys talk about the frequency of your ideas and the frequency of mine, and it's something that I battle with often because I try to keep so few ideas and try to only talk about or write about the ones that have really high conviction for me. I often make a lot of, type 1 error when you, believe in or rather reject a false positive. And so, there's a spectrum of type 1 and type 2 error, and, finding your place along that is kind of trying to work out your personality in this business.
Yeah, Jack Schwager said that, Carl. I asked him, what's the most important advice you could give to a trader? And he said, find a trading style that suits your personality. So it takes time to get there. So I've coached people who thought they wanted to be a day trader, and after pulling their hair out and mental exhaustion for a few weeks, they go, well, I'm thinking about swing trading now. So, I'd like to take you back. I went to your website, nice website that you're building right now, reflexmacro.com, and I read a little bit about your history. But what I'd like to know, Carl, is how did you get into the business in the first place? What was your initial experience? What was it like for you at the beginning of this journey?
It was a kind of roundabout way, if you will, because straight out of school, all I was really interested in doing was playing rugby and other things that young lads are interested in doing, and so perhaps a little bit distracted. But I think it was 2006. I picked up the Alchemy of Finance, and at the time I'd been buying some resource stocks, and at the time Western Australia was going through quite a boom with respect to the commodity super cycle, which it was kind of dubbed at the time.
Okay.
And then I realized that I knew absolutely nothing about this business, so I kind of took a step back and literally took all my spare cash, if you will, and bought every book that I thought would give me some idea about how to perform in macro, if you will.
Okay, name a few.
Oh, it's a long list. On my site, actually, Reflexive Macro is a reading list that I've put up. But
okay,
I would say the ones that are most influential to me now aren't necessarily trading books per se.
Okay, you mean like Livermore's book, and more about psychology and being in the zone is one that people like, and it's not our method.
Trading in the zone is very good, and I would definitely recommend that to anyone.
So it's really not our method; it's what's in our head.
Well, that's a part of it, isn't it? So it's
big part.
Kind of. I started writing this long essay. I tend to write long essays, so forgive me if this is a little bit off track, but I started writing an essay about how most of risk in trading is actually solipsism. I don't know if you know the term, but solipsism is defined as like being overly concerned with one's own kind of internal fears and turmoil. And as a trader, it's kind of precise to the manner in which a lot of us make errors in this business, because generally we're second guessing our idea, we're not calibrated between the idea and our time frame. We're stopping out too soon, and then we get back in, and then we question that again because price goes against us. And so that's exactly the word for the kind of process of risk as a trader.
Yeah, it's magnified. What happens in our personal lives are magnified with leverage.
Exactly. That's the other thing. Dial it up another couple of notches, and you watch out.
All right, Carl. Well, you said that you stay focused and you have a few themes, so you write a narrative. So I'm curious what themes and narratives you're sharing with your institutional clients here. I know that's who you provide your service for right now. I believe you're developing this website to also service retail people, little guys like me. So what are the narratives that have changed or that are still in place for this year, which we had a little bit of a shift where equities were a very smooth, calm, one-way market, grinding, becoming parabolic, and then we finally had it crack, and now it's a two-sided market. So what are your narratives that you're communicating to your people now?
I think I was kind of lamenting a little bit earlier on Twitter today about the fact that there's been like a decline in the old school vision macro, and there's no real novel ideas at the moment, which is a little bit annoying and sad. But there are some quite phenomenal and unusual things happening in markets right now. If you look at the swap spread between the Aussie and the US dollar, the 2-year swap spread, or the same in the Kiwi, which is, effectively the perfect proxy for the interest rate differential. The Aussie and the Kiwi are now negatively carrying for the second time in 30 years. I think the last time was in the Aussie was 97 until Q1 2001.
Oh, okay, so that 97 year kind of rings a bell with me. Isn't that when we had the Malaysian ringgit or some type of Asian currency crisis in 97?
Yeah, so it perhaps follows that there's some type of cyclical implications here too. I don't want to ring the bell on the market or anything. I don't have that kind of foresight, if you will. However, it is something that happened late cycle last time. It is certainly not the early cycle now, and so one must wonder. And so what also follows from this observation is that I think the Aussie dollar structure, well, mechanistically even is probably the correct word, because if you're anyone that's running a reasonable size of capital, you're going to really question whether you're going to get a reasonable rate of return holding any Aussie assets or Kiwi assets when you could just buy, 10 years yielding 3% as they,
Okay, so it's a competition from the 10-year note here in the U.S. And could it also be, I don't know if it's the chicken or the egg, but we've been looking at some long-term weekly charts in the Aussie and monthly, and the recovery that it's had over the last 6 months or a year, that trend seems to be breaking, and it really looks pretty ugly here.
Yes, so my weekly trend following model in the Aussie had stops at 76 handle and 50. So yeah, we've broken through that this week, and presumably there's a reasonable argument to suggest that a lot of people will be turning around in the currency.
Let me ask you this: you think it's because people are hoping there isn't going to be a trade war between China and the U.S. and Australia really being affected by what happens in the Chinese economy, especially for demand of what brought you into the business, natural resources, and that could be part of the problem with Aussie, because it looks like it could, maybe one day even trade down towards the move that we had here.
Yeah, that's absolutely the kind of second order thing that one must worry about. But also domestically, you know, I think things are tightening up in the property market here. And so, you know, the spillover effects could be magnified quite tremendously if
So you have a housing bubble in Australia?
I don't know, but I've been concerned about that for quite some time.
Okay, well,
And
we've lived through one here. I don't know if it 08, 09 was the same thing in Australia, but also your cousins in New Zealand have put restrictions on people coming there. And the reason is housing shortage and outpricing, squeezing the citizens of New Zealand on affordability.
well, it's certainly a more sensible policy, isn't it? Because Canada and Australia have made the mistake of trying to encourage the speculation in really what should be a consumer good, but instead, you know, perhaps it's a fallacy of economics to think that there's some type of trickle-down effect from, you know, everyone trading the same asset to each other for a higher price.
Well, that's what's been happening with central banks creating TINA. There is no alternative to stocks for, you know, we're talking about 9 years now. 9 years.
You'll have to forgive my ignorance. What is TINA?
There is no alternative, which, you know, forced people to take risks because they were getting 0.5% as a saver. So to get returns, they pushed them out on the risk curve, thinking that a bull market in stocks would have a wealth effect, create a wealth effect in the country. And it did for the 1%.
Yeah. Yeah, that's quite interesting. And so I don't know. I really wonder about this with respect to democracy as well. You know, why politicians are kind of encouraging people to do this instead of saying, "Hey, housing's a consumer good. Take your hard-earned capital and put it into something entrepreneurial that will give everyone a return, rather than, you know, like a real return, rather than."
So let me ask you this, Carl. Sometimes it's okay to not know what to do, and cash is a position too. And
Yes.
I'm just sensing that perhaps right now with what's going on, and you're talking about, you know, the unusual nature of the carry and so forth, that you know, things are unclear. And when they're unclear, do you recommend people just hold cash and wait for the clouds to clear up?
I definitely wouldn't hold Aussie, but I'm definitely on the flip side of that coin, if you will. I'm certainly no bear. I think expansionary fiscal policy in the US is much needed. Even though it is late cycle, we must consider that the US institutions are phenomenal in contrast to many of the other countries in the world. You know, the dollar is relatively priced against.
Okay. So you would favor the long side of the dollar and dollar-denominated assets still?
Yeah, I don't think we need to panic about US equities yet. I know it's a little bit of an oxymoron to say a healthy drawdown, but let's be honest, this business is people buying things and selling them, and occasionally we get bouts of selling, and that's, you know, that's a part of the process. Unless there's some type of systemic kind of you know, kind of mechanism which.
Carl, how are you positioned in these markets nowadays?
Long dollar yen, short Aussie, the small gold short, which is kind of my home, if you will. And then I have.
What are you looking? Do you have when you have like a gold short on? Do you have targets and objectives on the downside for a target? Is this a kind of a long-term thesis with a weak Aussie? I kind of correlate gold at times with Aussie. That gold, are you looking for, say, 1290, 1220? What do you have in mind?
It's really just you could call a stop in a way like a defeasibility, like a point at which your argument could be proven wrong.
Okay.
And so the point at which my argument for being short gold would be proven wrong would be like perhaps another 2 quarters of high CPI readings, and so perhaps some relatively reasonable inflation signal there.
How about
Otherwise,
price? How about managing risk on that position? How do you do that?
well, there's quite a natural stop at the highs at the moment. So
Okay, got it. 1368 or something like that.
Yeah. So size small, stop at the high, and let it ride, and try to be correct. Well, I mean, there's no guarantee, of course.
Okay, so tell me on your setup what the green and red lines are.
Oh, are you looking at my screen at present? Okay, so I've just got my trend following model up.
Okay.
And this is basically just a proxy I use for understanding where trend followers are currently positioned.
Okay.
So it's not something I trade off, but rather a way to understand where stops are. So if I flick to the daily,
is that some type of Bollinger Band, the shaded gray area?
oh yeah, that's a bolly. So it kind of just lets me know when something that is roughly at statistical extremes on, 20-day look back, if you will.
Okay. And what do you have a view on silver? You know, a lot of people are talking about maybe you have a view on this, the gold silver ratio.
Yeah.
Which, historically is pretty extreme. And then we had that big squeeze move last week, and everyone thought it was going to turn. The gold silver ratio, so far that hasn't been confirmed. Do you have a view there?
I just flicked over to silver first. I think this is really interesting because typically when I get these blue bars, which are compression signals on silver, we tend to have a large move. And, these periods where it trades sideways and all the, short gamma guys hedging very aggressively, on these expansions, they tend to have like a sharp move and then a reversal. So whilst this was not as aggressive as I anticipated, it certainly was something to take note of. With respect to silver gold ratio, let me see if I can pull this up.
You follow that?
Yeah, I do look at it. I believe that Adam Robinson, is it Adam Robinson or Adam Robertson, is quite a sharp guy, pointed this out as a brilliant method to compare to yields. Oh no, that's copper gold.
Dr. Copper.
Well, let's flick over to that. Oh, never mind. This is too hard for me to do right now.
Okay, buddy. You're doing fine. Oh, so there was that pop in the gold silver ratio. Right there.
Yeah, I didn't look at it. I don't find it informs my trading too much unless there's like some type of meaningful breakout occurring or something. Or in fact, if you've watched the things that I write about, I'm more interested in looking for statistical kind of extremes, if that makes sense.
Okay. Do you have any right now?
No.
Or your position express it?
The most interesting statistical extreme is probably probably the rate differential between Aussie and US. Really, that's the thing that is most front of mind for me.
Okay. So we're at an extreme. You're looking for it. Could it become more extreme or regress to the mean?
Yeah, in the long term, it will regress to the mean, but I am of the view that it will become more extreme. So, as I mentioned with Aussie property, I believe that the RBA is in a bit of a bind with respect to trying to.
Are they trying to let the air out of the housing? If you don't call it bubble, at least shortage slowly. So
I don't know if they can, to be honest, because so if their mandates are to focus on financial stability, the household balance sheet and inflation, the household balance sheet is going to win out at the moment because that is the most precarious situation of the lot. And that basically means their mandate is partly housing. And so the ability for them to hike whilst we have this bidirectional monetary policy, very, very constrained. I can't see how they could do anything but a very dovish hike, maybe late in 2019, if things don't go bad. But they could go very, very bad.
Okay. All right, Carl. Well, do you want to show your new website and tell our audience the best way for them to contact you to follow your thought processes? And
yeah, just hit me up on Twitter, which is Prometheus AM, or reflexivemacro.com is my blog, and it's kind of
okay. So everyone can find Carl's website at www.reflexmacro.com and on Twitter at Prometheus AM. Why the handle Prometheus?
Well, it's probably because I'm a fellow Greek, like Stelios.
Oh, okay. How did you end up in Australia?
Well, my yaya, who was from the north near Thessaloniki, she emigrated here after the Second World War, and my little family began.
Okay.
Yeah.
So it was interesting. Yeah. Go ahead.
Also, Prometheus is like the first revolutionary, if you will. He was the first guy to kind of thumb it up to the big guys and say, "Up yours."
Okay, you maverick.
Yeah, and
Carl,
that's
you maverick.
very much
you
something that
maverick
resonates with me.
Well, the whole team and the community want to thank you for your time today, Carl. Thank you for spending some time with us and sharing your ideas and really talking about less is more, where you don't have to be in the market every half an hour to take advantage of financial conditions. So again, thank you, my trading warrior brother. And
thank you, Carl.
Stelios, go ahead. You want to say?
I also wanted to say that Prometheus is the guy who brought fire from the gods to the people, right? So you are you're bringing fire to the people. That's good.
I mean, we'd have to eat things raw. So thank you for bringing fire to F.A.C.E today, Carl.
I'm about to fire up the barbecue, so you look out.
Have a great weekend, buddy.
I shall. Cheers. Thanks for your time.
Okay, buddy. Everyone, that was Carl Hodson Thomas. Thank you, everyone.
Adios, guys.
Thank you, everyone, from investing.
Stelios, I'll speak to you soon.
Okay, thank you, Carl. And wrap it up with TGIF. Good hunting the rest of the day. That's a wrap for us. And most of all, don't just count your pips, count your blessings. Should have picked up some pips on that turn in Euro. Aussie Kiwi heading down. Talk to everyone tomorrow. Adios. You're welcome.